KSE-100 index continues its north direction and gaining around 3% this week, and around 21% year-to-date return we can saw in 2024. So the benchmark index managed to close above around 75,200. That is a historical high. What I talk about the major drivers in the market are the consecutive declining inflation we can see from the last few months that has fueled the investors' expectations from, like, if the investors are anticipating that the May number would be around 14%. If we talk about the June CPI and to the compare to the previous month CPI and the for future CPI number, that would lead positive spreads of interest rate of about around 800 basis point. So the investors are like anticipating a potential interest rate cut in upcoming monetary policy that we can see in June after the budget. They are also eyeing on the, if you see the short-term option bond, we can see a lower cut of yield followed by the declining in the secondary. Though we are at the highest historical high trading, but what I see is the market is still on the very cheapest multiple. We talk about the previous historical multiple. The market used to trade for a 6.7x of their earning multiples for past 10 years, but still we are trading at like 4x. So that there is a discount of 33% still in the market. So what I am seeing, a market participants would be eyeing on the upcoming budget and the IMF program that could potentially impact the market movements and the setup of directions, because the investors are also anticipating there are some new taxes could be imposed in this upcoming budget that could lead a more negative impact on the corporate earnings side and the liquidity measures that could impact the salary class and other people. Also, the potential new IMF program could be the major driver for the future market direction that could be either on the positive or on the negative side. These are the major impact that we are seeing from the market perspective. Or talk about the foreign side, we have been visiting multiple foreign funds and we have been pitching the case for Pakistan investments. What I see personally in the past few months, we have been in the roadshow in United States. The participation for the Pakistan markets are like very high. So people are very keen, interested in looking after the Pakistan investment case. So many fund managers we have working with, we are right now writing a papers for them. So what we can see is like the Pakistan case is now getting stronger day by day, because we are now getting out of that chaos that we have seen in the last like 2 years. So what I see is the foreign investments could be the more directional deciding factor in the market, because there are a lot of room from the foreign side that could inject a new liquidity in the stock market, and market could be more attractive post-budget and post-IMF session. If you see the numbers compared to the previous months and the previous years, the inflation is actually rising, but the pace of the inflation is very slow. We have passed on all the gas prices, subsidy. We have ended up the subsidies. We pass on the electricity thing. So what I believe is the major tough period for on the inflation side is gone. So it will see inflation will be rising because we are like 250 million population country. Inflation would keep rising, but there's a supply and demand gap. We are an import-led economy. There are so many things that would be ignored if you are seeing the realistic numbers on the inflation side. But I see the realistic approach by the state bank would be the interest rate cut for like about 100 basis point. That would be a realistic move by them, because the key issue is in the system right now is the lack of liquidity available in the system. So the LSM growth are now affecting so many things that has been connected with the interest rate. So if you talk about like, if I ask somebody to start a business on a leverage, it's not viable to work on the 27% interest rate environment right now. On the corporate lending side, from the stock market perspective, we are always a future decaying market. So if you see a declining trend in the market, we are always ahead of everything. We can see the economy going down. We started the stock market going down before anything happens in the real system, or the real people can test the depth of the system. So this is always a futuristic approach. We have already incorporated the interest rate cut in the system. So that's why we are seeing the rally right now.